Can Xi Jinping lift the Chinese stock market? The Economist offers a sharp response. Fleeing or fighting back, the dilemma of China's affluent in the face of stock market crash. Consequences of CCP's 6 major state-owned banks supporting the housing market. Thousands of new energy vehicle owners abandon cars amid Hainan New Year Island challenges. Chinese New Year traditions shift quietly among mainlanders, unusual trends emerge nationwide. It's all covered in today's China Truths. Can Xi Jinping lift the Chinese stock market? The Economist offers a sharp response. The Chinese stock market has been experiencing a prolonged decline. On February 8, The Economist released an article titled "Has Xi Jinping Lost Control of the Markets?" In the accompanying illustration, the CCP leader is depicted holding up a sharply dropping stock market curve, with the curve wrapping around and binding his body. The article highlights that the beginning of the year has been tumultuous for the Chinese stock market, witnessing a jaw-dropping $1.5 trillion valuation drop in January alone. This starkly contrasts with the U.S. market's 14% rise and India's remarkable 60% surge during the same timeframe. This financial catastrophe has erased $7 trillion in value from the Chinese and Hong Kong markets since their 2021 peak, a staggering 35% decline. This nosedive challenges the Chinese Communist Party's reputation as a reliable economic guardian, with both domestic and international confidence waning. Foreign investors, once bullish on China, are now retreating, discouraged by Beijing's unpredictable policies and the chilling effect of deteriorating Sino-American relations. This has led to a trend of net selling among international stakeholders. Alarmingly, the erosion of trust is not limited to foreign investors. Wealthy Chinese are watching their fortunes dwindle, leading to significant capital flight. Those trapped by the CCP's tight capital controls are diversifying into safer assets or funds tracking foreign stocks, signaling a crisis of confidence. According to The Economist's analysis, Xi Jinping appears to know something was wrong. In addition to removing Yi Huiman, chairman of the China Securities Regulatory Commission, and imposing restrictions on short selling, he has instructed state-owned asset managers to buy Chinese stocks. While this action may temporarily boost China's stock prices, it also reveals the lack of confidence the Chinese government has in the market, underscoring the reasons for investors' departure. The Economist's analysis suggests that for China's economy to recover, a fundamental reassessment of the state's economic role is imperative. However, with Xi Jinping at the helm, a loosening of grips seems improbable, leaving investors navigating a minefield of political uncertainties. Fleeing or fighting back, the dilemma of China's affluent in the face of stock market crash. China's stock market faces an unprecedented freefall. The Shanghai Stock Exchange Index has spiraled down to a shocking 2,635 points, marking its lowest dip in years, just as the Chinese New Year holiday begins on February 9. Amid this financial turmoil, thousands of stocks have plummeted to their limit, leaving investors in a frenzy. Desperate and dismayed, Chinese investors are flooding social media with their tales of woe, even reaching out to the U.S. and Indian embassies in a plea for intervention to salvage their sinking investments. The question is, how bad is the situation? Major Chinese financial media Caixin reported on February 7 that Chao Xian, the founding partner of Tianli, Shanghai Asset Management Company, Limited, passed away due to personal mental health reasons on January 31, which has attracted wide attention as his company is a major investor in Chinese stocks. He was only 34 years old. According to information from the investment industry on Chinese social media, Chao took his own life due to the stock market crash. His fund's supply chain was cut off due to the sharp decline in the stocks he held. It is also said that Chao borrowed huge funds from loan sharks to try to equalize the funds due to the cutoffs. However, the Chinese stock market plummeted further, leading to the loss of funds, and he couldn't repay the loan. Another person is Xiaoyu, the legal person of Shanghai Tianmei Network Technology Company, Limited, who revealed in a video on his social media account that he has lost more than 5 million yuan, about $703,000, in stock trading in the past 10 years. He currently has no house, no car, is unmarried, and has a debt of 3.5 million yuan, about $492,000. He said that he was so desperate that he once planned to go to the Shanghai Stock Exchange to take action for revenge. He also attempted to take his own life several times because of the loss in the Chinese stock market. Statistics show that among China's 1.4 billion population, 600 million Chinese have a monthly income of only 1,000 yuan, about $140.50, and 900 million people have a monthly income of less than 2,000 yuan, about $281. It is estimated that 200 million Chinese invested in China's stock market. Mr. Frank Xia, associate professor of marketing at the University of South Carolina Aiken, wrote on February 9, "People who have disposable income that can buy and invest in stocks are already the middle and upper middle class in Chinese society. This should be the real pillar of the Chinese economy and the main body of consumption. These wealthiest Chinese, excluding the top elites and the groups at the top of the CCP, are the primary targets for the CCP to exploit." He wrote, "Ordinary investors in China have little access to real information. The CCP and the powerful control the media and the right to speak and deceive the people day after day to lure flocks of individual Chinese investors in." In response to the situation, Beijing's securities regulator put out new restrictions on February 7, banning short selling and only allowing buying stocks. Fleeing or fighting back. Taiwanese financial expert Huang Shirtsong said on February 12 that now China's real estate, stock market, and financial products have all fallen, and even the renminbi has depreciated. In addition, government policies are suppressing the rich, and the wealthier class have direct experiences of it. These kinds of incidents of agents or company executives jumping off buildings or dying accidentally are constantly happening in China, which shows that the wealthy Chinese are quite uneasy under the leadership of Xi Jinping. Mr. Yuan Hongbing, an Australia-based scholar, said on February 12 that in the view of the Chinese leader, the stock market has only one role, which is to finance China's state-owned enterprises. Whether China's rich or middle class still want to maintain their wealth according to the past thinking model, it is completely impossible. Due to the rapid decline of the entire Chinese economy, the overall trend of impoverishment of the Chinese people has begun. Mr. Huang noted that Beijing continues to strengthen the party-state system by harvesting various industries and pushing the wealthy to the opposite side. Meanwhile, it firmly controls the party, government, military, secret agents, and media. People have no effective way to fight back except to escape. Only when people leave China with their money are they safe. However, Mr. Yuan pointed out that not everyone can escape, and Beijing's perverse actions will eventually trigger resistance in the country. Every policy implemented by Xi Jinping now is pushing China's domestic politics onto the path of national resistance and popular uprising. Consequences of CCP's 6 major state-owned banks supporting the housing market. China's deepening property market crisis has prompted a significant response from the nation's financial institutions. In an ambitious move to rejuvenate the housing sector, China's 6 foremost state-owned banks, including heavyweights like the Industrial and Commercial Bank of China and the China Construction Bank, have introduced the Urban Real Estate Financing Coordination Mechanism. This initiative has seen these banks engage with an impressive total of 8,200 financing projects as of mid-February. Notably, the Bank of China has fast-tracked the approval process for over 110 projects, allocating funding that amounts to approximately $7.7 billion. Similarly, the China Construction Bank is in the process of approving funding for more than 2,000 projects, with over $2.8 billion hanging in the balance. Furthermore, joint stock banks such as the Industrial Bank, China Everbright Bank, and China Merchants Bank have aligned with this initiative, endorsing projects for financing. This strategic maneuver by the Chinese government aims to not only push forward projects that have been put on hold but also to invigorate the larger economic framework of the nation. However, this approach is not without its skeptics. Financial experts caution that this could place an undue burden on banks and potentially exacerbate the economic downturn. Taiwanese finance specialist Huang Shizong voiced concerns over the risk involved, indicating that the failure of property developers to improve operations could lead to an increase in non-performing loans, thereby straining the banks and possibly fueling a property market bubble. The backdrop to these measures is a property market that has been languishing for the last 2 years, with major real estate firms floundering. The Chinese government has made concerted efforts to prevent a property bubble burst, introducing 16 financial measures in November 2022 aimed at supporting the market, and by November 2023, had whitelisted 50 major real estate companies, urging banks to provide them with financing. Underlying issue, as highlighted by Mr. Xie Tian, a professor at the University of South Carolina Aiken School of Business, is the acute oversupply of real estate. Despite any intentions to salvage the market through property acquisitions, the continued depreciation of these assets fails to address the root of the problem. China's Ministry of Housing and Urban-Rural Development has disclosed that the nation is home to 600 million housing units, with nearly 400 million apartments sitting vacant. This is compounded by the crisis left by the real estate giant Evergrande, which is responsible for 1.62 million incomplete apartments affecting 6 million homeowners. Despite the introduction of policies aimed at stimulating the real estate market, such as abolishing purchase limits and lowering down payments, the decline in property sales has persisted. Huang Shizong suggests that a more effective strategy might be to allow non-viable real estate developers to go bankrupt and reorganize before banks intervene, arguing that investing funds without a market correction and restructuring phase is fraught with risk. Columnist Wang He has observed that China's real estate sector has reached a dead end, with a crash being an inevitable outcome. Given that real estate accounts for about a quarter of China's GDP, its collapse could have devastating effects on the nation's economic growth, banking sector, fiscal stability, and personal wealth. In conclusion, apart from resorting to printing money to stave off the collapse of the real estate bubble, the Chinese Communist Party appears to lack alternative strategies. As per Mr. Xie Tian's assessment, China's economy is likely on a path to further deterioration, potentially regressing by 20 years due to the accumulation of debt. Thousands of new energy vehicle owners abandon cars amid Hainan New Year Island challenges. As the Chinese New Year holiday winds down, travelers returning from Hainan celebrations are facing a snag, with thousands of new energy vehicles stuck and unable to secure spots on ferries. Owners are forced to abandon their cars on the island and head back without them. A widely shared video from February 14 captures a tourist at Haikou Shouying Port Ferry Terminal in Hainan being detained by police after protesting the unavailability of ferry tickets, sparking a protest and roadblock by relatives. It looks like they won't be until the end of the month. Meanwhile, Upstream News reported a new energy vehicle owner from Chongqing saying they had tried to secure online ferry tickets for several consecutive days without success. Attempts to buy tickets directly at the port, even waiting until midnight, proved futile. A staffer from a shipping company covering Haikou to Shouyin Port mentioned they wouldn't be able to take orders until after March 5 due to policy restrictions. Meanwhile, numerous car owners anxious to leave have already parked their vehicles near the company, with over 1,000 cars, including both new energy and gasoline-powered, currently awaiting transport. Earlier, residents in Hainan noted the exorbitant cost of air travel from the island post-New Year, with return ticket prices to Sanya skyrocketing from 1,000 yuan, about $140.50, to over 10,000, about $1,405. Chinese New Year traditions shift quietly among mainlanders, unusual trends emerge nationwide. In the 2024 Chinese New Year, there's been a quiet shift in some habits among mainlanders, particularly 5 strange phenomena have emerged in mainland rural areas. On February 15, an article in the self-media Little Motor Emotional Story unveiled these phenomenons. The first strange phenomenon: despite the construction of numerous new houses, rural areas are witnessing a decline in residents. These new houses often sit vacant, resembling unfinished buildings. The second strange phenomenon: while the number of bachelors in rural areas has increased, single women are scarce. The actor wrote, upon returning to his hometown this year, he was struck by the abundance of bachelors, which felt unsettling. The third strange phenomenon: fewer people are watching television at home. Televisions have become mere decorations, barely used throughout the year. Even during the Spring Festival Gala, families opt for activities like mahjong, cards, phone usage, or early bedtime, rather than watching TV. The fourth strange phenomenon: wealthy families in rural areas are having fewer children, while poorer families are having more. In several affluent households, young people hold prestigious positions or high-paying jobs but typically have only one child, if any. Despite encouragement to have more children, they remain reluctant. Conversely, ordinary households tend to have 2 or more children. For example, my cousin, aged 50, had 3 daughters during the family planning period. Later, when the second child policy was introduced, he had 2 more children to have a son. Now, the family has 5 children, 4 daughters, and 1 son. The fifth strange phenomenon: fewer people are engaged in farming. In the past, villagers would fiercely compete for water sources and farmland. Today, farming has significantly declined, with no more disputes over resources. Commenting on the article, netizens corroborated these observations, noting the increasing desolation of rural areas and the gradual fading of the festive atmosphere, especially in rural mountainous regions in the south. 3 strange phenomena sweeping across the nation. In an article by a certified investment manager, Finance Makes It Clear, highlights 3 unusual trends emerging throughout China during this year's New Year celebrations. Firstly, there's a notable shift in attitudes towards homeownership. Migrant workers, previously wary of being asked about property ownership upon returning home, are now facing fewer inquiries. Concerns about owning property are waning, with elders advising young people to be content with having a place to live, suggesting future property prices may decline. With fewer people buying homes, savings that once went towards mortgages are now being redirected to other forms of spending. Secondly, many people returning home for the new year are choosing to stay in county town hotels rather than their family homes due to previous weather-related illnesses. Family members support this decision. Lastly, instead of gathering with family, more individuals are using the holiday to travel. The author wrote, these strange phenomena are occurring across the country. Eventually, people will become accustomed to them and won't find them strange anymore. Let us know your thoughts on today's topic by leaving a comment below. If you found this video helpful, please share it with a friend. It inspires us to continue creating more quality and reliable content. Don't forget to like and subscribe for more interesting insights from China Truths. Thanks for tuning in.